seeing really tough conditions across Australia. We have seen a drawback in buyer activity. Rental activity, as I mentioned last week, is really showing high levels of distress. But Canberra really is showing a very, very different conditions. So we have actually seen an increase in buyer activity compared to the same time last year. It's up about 16%. If we have a look nationally, the comparable figure is down 10%. We are even seeing increases in searches for new developments. So there are very, very different conditions in this market. So probably driven by the fact that buyers and renters are far more confident, also mainly because there is growth in government employment. So all that stimulus, the 16.4% worth of GDP, will require more people in the tax office, Centrelink, obviously health departments will also need an increase.
Yeah, because so many people in Canberra and surrounding areas are employed as government employees.
Yeah, exactly. So, it is a government-run town, and, it does make it a fairly stable market. It isn't often a market where we talk about our performance, but at this stage, when you compare Canberra to pretty much the rest of the country, it is behaving a lot different on our side on realestate.com.au compared to elsewhere.
What about commercial property seekers?
Yeah, so commercial property has obviously been in the news. Yesterday we did have that National Cabinet meeting about how commercial landlords should be handling tenants, and it is really a big deal for shopping centre owners at the moment that a lot of retailers are experiencing a lot of problems at the moment. We can see on our Real Commercial site that there has been a significant pullback in number of inquiries for people looking for retail leases. Also office is getting impacted as well. So really tough times, I think, from both the tenant and the landlord perspective. One sector that does seem to be showing very different trends is industrial. We've actually seen an increase in inquiry levels on Real Commercial, likely driven by the fact that online retailing is doing really well at the moment. So more of us staying at home. We do need things delivered. It does well. It does mean online retailing does well. And then, of course, supermarkets doing particularly well. So all that warehousing required for supermarkets is really supporting industrial property.
Although the world looks very, very different at the moment, aspirational activity and what people want doesn't change. What about home buyers, first home buyers?
Yeah, look, I mean, it's interesting looking at the different buyer groups. So we have started to get a lot of really good data coming through from March. So look, no surprises, inquiry levels have dropped off across first home buyers, investors. We can see that the number of searches for new developments has really pulled back. I mentioned commercial property before. But when we have a look at first home buyers, we can see that compared to the same time last year, so when we have a look at March 2019 to March 2020, we've actually seen a little bit of a pickup in inquiry levels. So it's very small at a national level. It's only up about 4%, but given what's happening, it does seem quite surprising. The area seeing the biggest increase in first home buyer inquiry, again, coming back to Canberra, that's up 58%. Victoria has seen a slight decline of around 7%. So I think on one hand, I think people are obviously very cautious at the moment. They're really worried about their job security, their ability to pay back loans, pay their rent. But on the other hand, a slower market does benefit some buyer groups. And, we know that first home buyers, when the market is red hot, they do back off very quickly. They don't like to transact in a hot market. At the moment, obviously a very slow market is good news for them.
Well, a real hot issue at the moment is landlords and landlords being asked to give rent relief. Some interesting talk coming out of the New South Wales government that they would look to abolish land tax for those that are going to give rent relief. This is a difficult one, isn't it? It's hard to means test. How do you do it? If you give someone $100 off a week for 3 months, do they have their whole land tax abolished? It's a difficult one to try and work out.
Yeah, look, it is difficult, and it is difficult to work out how to deal with this situation with very, very low rental demand. A lot of renters going into high levels of distress. We saw very quickly that although people like to look at the impact on pricing and what will happen to property prices, that the one area of the market that has been impacted very, very quickly is both residential tenancies and also commercial tenancies. So on one hand, we have had this 6-month shutdown in evictions, and really to just make sure that people have somewhere to live and businesses can operate with far less revenue. But on the other hand, we do have landlords that are really struggling themselves to potentially pay off debt or, employ staff and the like. So the early stage announcements around how that would be handled, I think were seen as very unsatisfactory. I mean, basically the government said that landlords and tenants really need to sort it out for themselves. So hopefully, there was a National Cabinet meeting on Friday, so hopefully next week we do start to see more announcements as to how landlords can really cope with this.
Finally, one of the stories that we've been talking about all year before the whole pandemic sort of took over most of the conversation was this growth in these two big markets, Sydney and Melbourne. How do you think that will play out once we get through the crisis and look towards the back end of 2020?
Yeah, I mean, it's anyone's guess. I mean, it's very hard to predict at the moment what's happening. I mean, I've been looking very much at micro-level data. I think trying to look at any macro-level data and trying to predict pricing is quite impossible at the moment. I mean, what we can see is that buyer activity has pulled back. We did see price increases in March, but it was pretty much because the first half of March was still very, very red hot in the property market in Sydney and Melbourne. So prices increased slightly. Buyer activity has really pulled back. I think one of the things that will cushion the blow for property is the fact that we do have these 6-month mortgage repayment freezes. So on one hand, people, we are seeing rising unemployment. It does put people in very, very difficult situations. But if they can put a freeze on their mortgage payments, it means that they don't go into the same levels of distress and potentially having to sell their properties at a discounted price. So, we're not seeing any levels of distress on realestate.com.au at this stage. It's very, very good news for the market. It will cushion the blow. I think when we come out of this, it really just does depend on how long this downturn continues, how quickly everyone can get back to work. I mean, one of the real killers for price growth is unemployment. We know that when people become unemployed, that really does make a property market suffer significantly because people do struggle to pay for a lot of things. So, yeah, at this stage, hopefully this is short and sharp and we do have a really good recovery coming out of it and we start to see conditions return to normal.